Hello everyone, welcome to my channel. Let's take a look of today. Topglove just came out their financial result and share price dropped 10.37%, currently at 2.16. Let's take a look of what the market expectation and what they actually deliver. Market expect 2.09 billion in sales and also 0.0392 for earning per share. Okay, what they actually delivered is below the market expectation by about 500 million. They deliver 1.584 billion, and earning per share they delivered at 2.32 cents. So this is also lower than what the market is expected. So let's take a look of this net profit margin. Let's take this one at 5 million divide by this amount, you will get around 11%. So this sales and profit actually is around the forecast I made few days ago. The sales is between this 1.5 billion, and the earning per share is around at the lower end. Let's take a look of this balance sheet. Currently, they have cash of 894 million, and you can see here the money market fund has been reduced quite a lot compared to last year. Last year, they have 1.3 billion in the money market fund, equivalent to cash for them to get higher interest. Currently, their cash out only left 605 million, and they have some debt securities, some bonds they have purchased, and their loan and borrowing, this one is 305 million. And another one is 133 million. So their net cash, if you take all the cash and minus out the loan and borrowing, is around 1 billion. Okay, and they have this perpetual sukuk, which they will need to serve the interest every quarters. They are paying around 12.8 million for the interest to the sukuk for the bondholder. It's a perpetual sukuk, but we're not sure whether they will redeem the entire sukuk. It's up to the management. So take a look of the operating cash flow. Their operating cash flow for this quarter is quite low. It's very low. Only can generate 39 million. Reason is because they have paid the government 582 million due to previously they earn very high income. Now is payback time, and this cash from operating activity minus off this only left 39 million. So they need to maintain their capex. Their capex is 228 million. So they got no choice but to withdraw the fund from the money market, withdraw 700 million, and then they have a balance to pay dividend, which was declared before. So from the previous quarter, pay 432 million. So that's why the money market fund, the amount has been reduced, and also the net asset also has been reduced compared last year. And compare last quarter was 0.75. So they are actually reducing the money market fund. That's the reason the NTA also reduced. Okay, here the segment reports. We know that from this segment report, Malaysia has the sales is 1.4 billion. The profit margin before tax, you just take this amount, divide by 1.43 billion, is around 16%. For Thailand also about the same, 37 million, divided by 221, around 16%. But at the moment, for their China factory and Vietnam and other factories are not making any profit for this quarter. Maybe ASP dropped too fast and the volume didn't pick up. That's the reason they didn't have any profit. Let's scroll down and see. Currently, they have this capital commitment of 1.02 billion. So net cash is 1 billion. If let's say they will need to fulfill this commitment, they need additional cash. They can continue to, the other way is sold their treasury share in the market, but they bought at high price. So another way is they get the money from the Hong Kong listing to fund the capital, to fund their expansion. Let's review their performance. Comparing last year, the profit dropped 92%, sales dropped 67%, and reason is management say due to normalizing ASP, and customer also take a cautious stance. They actually bought less, and they also hold on to and anticipate there's further tempering in growth prices. Meaning to say the ASP, the customer also think will continue to drop. And for US, some good news, sales volume is expected to improve in quarters to come. It's not immediate, so it's a slow recovery for their US sales volume. Okay, so gradually replenish their stock in view of normalizing ASP. And also raw mat has increased last time, that's why they have very high cost, but now has been dropping. So they see a declining trend. So with this, they are paying 1.2 cent, also together with their policy, fulfilling their dividend policy, which is 50%. Okay. For other things is, okay, let's take a look of their margin. Their margin currently is at 13%. So it's around the 2016 level. Let's take a look of their comparing last quarter. The sales dropped 24%, profit dropped 58%. Reason is ASP was lower. ASP dropped faster than the raw mat cost. That's the reason why they have this lower net profit margin. But I think next quarter will be better because the ASP drop, the pace is slower as compared to this quarter. And also for this expansion, the reason they need to go Hong Kong to raise fund 2 billion for their 2022 expansion to increase 11 billion capacity. So for the rest of the plan, we don't know whether they can achieve because one expansion need at least 2 billion. If let's say 1 year they cannot earn more than 2 billion, they need to either get fund from shareholder to further dilute their share, or they can raise debt or other way to increase to have the money to go for expansion. Okay, currently, okay, for this prospect, company management think the demand is still growing, so they expect to be stronger. It will offset the growth in supply. So we just don't know who will get the sales because the volume is increasing 10% per annum. But if let's say the supply is more than 10%, it still put on pressure on the ASP. Okay. So now we see here they have some hedging. They do have some derivative for hedge their USD currency. And fair value hierarchy for this one, you can see the money market fund belong to level 1 and the bond. They bought some debt security outside Malaysia, maybe a USD bond, I don't know what currency. So they have this fair value. So it's a 300 over 1,000, over 300 over millions bonds in level 1. And level 2 is the hedging. So this is a total borrowing they have 439 million. This is the earning per share. We need to take note that this earning per share is 2.32. Okay. After Hong Kong listing, if let's say they fully sold their share, will be 8.8 billion. So you need to take this, if let's say the net profit didn't change, take this amount, divide by 8.8, okay, it will be much lesser. It will be like 10% lesser than the current earning per share. Okay, let me calculate. It's around 2.1 cent after the Hong Kong listing. If let's say they still cannot grow their profit, because we know ASP is still normalizing. So that's about this Topglove. For my view is currently I will still continue to monitor this Topglove share, and I will wait until ASP normalize. The Hong Leong Investment Bank said that next year June will be the end of the normalization. So every month currently is around 30 for nitro. Every month drop 5% until next year June. So by then it's already 20. So by 20 you can see what is the profit they will generate. We shall see by then. Okay, thank you so much for your time. Hope you like my video. Help me to share, like, and subscribe. Thank you.